Matt, congratulations. You were found as a target, I guess let's put it that way. Why did you decide to go this route? Why did you imagine that, Gores Holdings would be the best partner for you?
Yeah, no, it's great. We're real excited over here at UWM and really planning on building our business. So going public was one decision process that we really think helped put fuel on the fire, help us really grow the wholesale mortgage business and help our brokers succeed and our team members. But then picking Gores or going IPO, once I met Alec Gores and Mark Stone and their team, and those guys are some of the best guys. And you only go public one time in your life, at least how I think about it. And so having great people that have done it before that can guide me was a fantastic option. And I wasn't cashing out. I was trying to build the business. And so those guys have been great to help, and I would definitely do it again if I were to go through the process again.
So talk to us a little bit about your competitor Rocket doing sort of something similar, going public last month. It's now valued at $41 billion. What would be your goal when it comes to your competitors?
Yeah, Rocket's a great company. Dan Gilbert's done a great job building that company. They're the #1 mortgage company. We're the #2 mortgage company. And so our plan is obviously to grow, and we have great plans in place. And we think this actually gives us the resources to compete at the highest level. And so we're excited to take more market share and grow. And, we're not far behind them. And at the same time, we're doing the best we can, and we're going to build our team. And so we think it's a good opportunity. And this kind of levels the playing field from us versus our other competitors that are the top 5 lenders, such as Wells Fargo, Chase, and Rocket Mortgage.
So, Matt, talk to us a little bit about what you're going to do with the money raised, $925 or so million in new capital, and you intend to put that to use in technology and so on. Explain to us what that actually means.
Yeah, we have 900 plus amazing technology team members here. They're always coming up with new things, and this is just putting fuel to the fire. Like, how do we come up with more innovation? So we're going to continue to hire on the technology side, but also help the technology, but help our mortgage brokers. It's a big education process to let people know that the best way to get a mortgage is through an independent mortgage broker, whether it's findamortgagebroker.com or going to your local. Like, you got to find a local person, and so we're going to spend a lot of money educating consumers, because once they do that, they get a faster, cheaper, and better process for a mortgage, and that's what people want.
Matt, talk to us about your mortgages. You're the largest wholesale mortgage lender, and we obviously know after the 2008, crisis, wholesale mortgage lending went out of fashion a little bit, but now it's about, what, 20% of the marketplace again. Where do you see that going?
Well, we see it growing. It really comes down to the facts of if it's cheaper to go through a mortgage broker, which it is, and then it's also, you can make it faster and easier, and that's really where UWM has come in with our technology, with our service. We're closing loans in 17 days. Other places take 60 days. 30-year fixed rates in the 2s. Other people are offering in the 3s. Because of those things, the channel's going to grow. If it's the best place for a consumer, it's going to grow. So we believe it'll go back to 30, 33% in the next 5 years, and I think it could go to 50% in the next 10 plus years. And that's what we're going to do, help the broker channel grow, and if they grow, UWM will continue to grow as well.
Now, talk to us about the types of products that you're putting out there. So what kind of down payments, products do you have, and how will people be able to take advantage? Because we are seeing a booming housing market in certain areas, more suburban and in different geographies, but obviously the coronavirus is having a huge impact in more urban areas too.
Yeah, so we're doing all the loans through Fannie Mae, Freddie Mac, FHA, VA, through the government programs. And so there's programs with 3% down, 5% down, 10% down for purchases. There's obviously refinances and other opportunities with higher numbers, but it's all available, and we're excited about it because it's about, mortgages are not the same everywhere else. It's getting a great rate, great process, and through the mortgage process, low down payments are available, but also people putting 40% down. We do the highest quality loans, and we want to take care of those borrowers fast and easy.
Yeah, I think you have one product that requires as little as 3% of a down payment. Is that correct?
I'm sorry, I missed you on that.
I think you have one product that requires as little as 3% of a down payment. Is that correct?
Yeah. Yeah, that's just Fannie Mae and Freddie Mac have great programs through the government-sponsored entities. So yeah, those 3%. There's also VA loans for veterans, which require no money down, and those 30-year fixed rates are in the 2s also. It's just the mortgage is more complex, and so you have to find a mortgage person, a mortgage broker to help you shop for your loan, and that's really where we specialize. We help them find the best deal for the consumers.
Now, how will you proceed? Because I believe your stake in this combined entity will be more than $11 million. So congratulations on that. Will you stay at the helm, and will you stay very involved?
Absolutely. This is what I love doing. There's a difference. We're not going public to cash out. I'm going public to really add to the business, to help grow. And so I'm 40 years old. I'm excited about what's going on, and we're going to continue to build the business for years to come. And I'm excited to be part of the team here with our brokers, with our team members here, and really we're going to try to take it to the next level now.
So I do have to ask you about the news out today that the SEC is beginning to look at SPACs and the transparency for potential shareholders, because there are so many. I mean, I think you'd agree it's been a massive explosion of these vehicles this year. Curious as to your thoughts on this, and whether it's a good process that the SEC should start looking at these more closely.
Absolutely. I mean, I don't have any problem with. I think that anything that goes on, whether it's SPACs, whether it's in any business, you want people to look at it and make sure it's done right. I believe SPACs are probably a more efficient way of going public than IPOs in many respects. But at the same time, you got to make sure that everything's done, all the transparency. And luckily for us, we worked with the Gores team, which has been doing it for years and years. They're not new to the game. Alec Gores was one of the, people call him the godfather of SPACs in some respects. He's done it the right way since 2015, and I think even before that. And so I feel real confident in the partnership we've got with that, and I think it's a great way to become a public company.